Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask him in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel today. So if you'd like to watch it again, you can do so there, and we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the Handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know in the questions tab and I'll send you a link and I'll help you find them. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products that we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box. Please click show more and you should be able to see them. We also remind you that at the end of today's webinar, there'll be a short survey. So please take the chance to tell us how we're doing and we can improve your webinar and take a couple of minutes to fill it in. So to introduce our technical analyst, I'm sure you all know him by now, but Trevor Neil has vast experience, over 40 years in fact, as a technical analyst and trader, and was former global head of technical analysis at Bloomberg. So Trevor, over to you.
Okay, thank you, Dan. Thank you very much to everybody for joining us today. Starting today with, before we look at the actual charts, we'll look at the relative rotation graph of the G10 currencies versus the US dollar. So those of you that are not familiar with this, we have the dollar in the crosshair here. Going to the right of the vertical here is outperforming the dollar. Things furthest to the right are the strongest things. Furthest to the left, that's the weakest things. And then in the horizontal axis here, higher means with positive momentum. So it's combining two messages, the relative strength and the momentum of the relative strength. So it's a different way of visualizing things. So what we can see here, for example, New Zealand dollar over here on the right, furthest on the right, just about, but grouped up with the other commodity currencies as well, and just edging around a bit. So the momentum of the outperformance is declining. That doesn't mean it's going to go down necessarily, it's just slowing up a bit. We can see the euro is lagging way behind here, and it is, you can see when we look at the chart is beginning to look really horrible. And then over to the left here is the Japanese yen. And this was such a stable relationship with the dollar for such a long time, but now it's underperforming the dollar. So maybe, you know, pairing off rather than pairing versus the dollar, you might pair versus the yen, because the yen, although it's slightly improving, it's still far over to the left there. That means underperforming. So let's have a look at these graphs now. So starting with the euro, and just the big picture on the euro firstly. You know, I talked a long time ago about this potential head and shoulders pattern, left shoulder, head, right shoulder. We broke the neckline, but then we revisited the neckline for 1 week. We were above it, then we've come down, revisited the break, I think, of 117 and come down again. I think this is resuming, it's moved down. The ultimate minimum price objective, which is measured from the head to the neckline downwards, is at 111. I know that's a long way away, and I'm talking about a long time away as well. But basically on the basis of that head and shoulders pattern, that's where we're headed, and then we pick up a lot of considerable amount of support at the 110 level. But yeah, it looks pretty awful. On Friday, the Thursday attempt to break up aborted, and we sold off hard, threatening to break the support low, the minor support low at 115.23. I think that is going to be this week's objective, is to break that in order to infer that we're continuing the downtrend. If we break the resistance at this 116.92 high here, then we're targeting these lower high patterns in here. But I think, you know, I feel that the RRG is telling us that the euro is performing very poorly, and it does look as though it's more threatening on the downside, and the support is very light on the downside, whereas the resistance is very heavy. It's going to struggle to go up, but it's much easier to go down, and it looks very vulnerable to progressing further that way. So maybe we've had the rally, and the downtrend is resuming. Key level, of course, is the break of this low, 115.25. Moving now to sterling cable. Now remember where that was on the RRG chart. It was not as far to the right as all the commodity currencies, which I'll come to in a moment. But they're the best ones to got a steady dollar, and then you've got some outperformance of some currencies that are even steadier than the dollar. Just the euro weaker. So on the weekly chart of sterling, we've got a higher high pattern here. We're pushing up, and we've got a lot of resistance we're coming into here, that big double top up in there. And we can see it's losing momentum. The MACD is falling here. We've got lower highs in the RSI. I think this is a struggle. It's steady, but it's struggling. So on the daily chart, we've got clear resistance at this high at 118.98. We've got quite a lot of support where we are at 118 at the moment. More important support developing below 117.37, and then the crucial must-hold level of 115.55. It is holding up. It's in a consolidation, but there's a lot of resistance, and it looks like it's struggling. And so this one is going to still stay behind the pack, which is made up of the commodity currencies. So let's look at the Canadian dollar and the Australian dollar. We'll start with the Canadian dollar here. So the Canadian dollar, of course, it's expressed as US dollar, Canadian dollar. So falling here on the prices, the US dollar falling and the Canadian dollar rising. So the steadiness here is a little bit of the Canadian dollar weakening. That's what we saw on that turning down shape on the relative rotation graphs. It's over on the right, but turning down, curving in. That's what curving in looks like on a relative basis when we're looking at it, not just versus the dollar, but versus everything else. So it's consolidating here. There's a lot of resistance above, dollar resistance above, starting at 12.45, massive amount of that. So any steadiness of the US dollar here, I think it's going to struggle to make much progress. Much more threatening is the low here at 123 and down to 122 on here. So I think that this current phase of commodity currencies outperforming is likely to continue. This is just a pause, and even with a steady dollar, this one should continue to outperform. Looking at the Australia dollar, which is...
Trevor, sorry, can I just interrupt you for a second?
Yes, of course.
Yeah, so we've had a request to take a look at the... Sorry, just while we're on the Canadian dollar, we've had a request to take a look at the Canadian dollar versus the euro. Could you take a look, please?
Oh, yeah. I've got that set up just now.
Ah, sorry.
Yes, okay. It won't take a second. So Canadian dollar. Against the euro, it's a good one. I have got set up here versus the yen, which is the one I prefer to do. So let's put it here. So CAD, KPY. Before I press the button here, what would we expect to see? We expect the Canadian dollar to be going up versus the, sorry, not the JPY, the euro, you said, sorry.
I was just wondering what you're doing there.
Yeah.
Because we're just talking about it.
Yeah, can't manage to think about two things at once. Yeah. So we would expect the Canadian dollar to be outperforming Japanese yen. That is going up, which we do see it's doing. We've got to pause here. Good observation, actually, good one to draw our attention to. Thank you, whoever did this. Who did say that?
The asker is Mashkudu Molele.
Mashkudu, thank you so much. Well, you were probably correcting me for not having had this up here. So here we've got a test of the 2020 high, beginning of the year high. There we're pushing up. We know from the RRG this is a good combination to have, and it's pushing towards it. Could be about to break it, which will release a lot more energy in that. And I mean, this is quite an exciting chart. So thank you for drawing our attention to it. I'm going back a little bit further to bring in more resistance from 2017 high up at 7250, 0.7250. Here, that would be the next sort of target level. But we're at a crucial breakout point here, absolutely brilliant. But that I should have spotted myself because of RRG, shouldn't I? I should have been doing this. I said about doing these combinations versus not the US dollar, but versus the Japanese yen and versus the euro, because the euro is also weak. And so here's a prime example of it. But I would like the Canadian, if you want to go for the weaker one, then I go to the Canadian dollar, so that versus the Japanese yen, which has already broken. You know, so we've got the Canadian dollar on the right, we've got the Japanese yen on the left. Here it is, very good combination here, and we're moving ahead really well on that. And let's bring in more data on that. And you see here, we're clearing this 2017 high already. That's what we're clearing now. So with all due respect, I would say this is a better one to do. Is the Canadian dollar versus the yen rather than the euro, and that's what you do see on the RRG chart, because you see the euro is here and the yen is over here. So you're getting that bit of which you're adding to versus versus the euro. So better still probably as the Australian dollar versus the Japanese yen. That's what the RRGs are for. The whole outperformance is at both ends weakening. So the all these commodity currencies are heading southwest. That's not a strong message. They're still far to the east, and that means they're very much outperforming, but they're losing the momentum on it. And the Japanese yen, which is underperforming, is gaining momentum. So the edge is declining, but it's not to say it's over. It still is that these are much stronger than that, which is stronger than the dollar and stronger than the euro. Euro is pretty well correlating with the US dollar itself. I mean, that's what's great about that, is because you're seeing many charts in one chart with a relative rotation graph. It's very difficult to do all these combinations one by one, but here's the one that it picked up, and it is the best one, I would say. I was also going to do the Norwegian crown just very briefly because it was also over on the right-hand side there.
I believe the Australian dollar was what you wanted to go to next, Trevor. If I'm not.
Yeah. Okay. All right. So here's the Australian dollar. Again, Australian dollar rising here is the Australian dollar rising, which is what we're seeing, versus the US dollar in this case, and that is what's happening. I think here we can say we've got a lot of resistance above, a block of resistance above this head and shoulders pattern, high, higher, high, lower, high. That's the break of the neckline. This is a real classic, one for your album. The minimum price objective of 71 cents was exactly where we got to, projected off this neckline break here. And now we've bounced back to it. But this is now a significant resistance level. I think the Australian dollar is going to struggle to keep its outperformance, and what that will look like on the RRG chart is here it is far over the right. Maybe by this time next week when we're reviewing it, it'll be taking over the role of the yen, the Canadian dollar behind us here, not the yen, the Canadian dollar, and being down here perhaps there because suffering from resistance. Depends, of course, what the dollar does. But I do want to talk about the Norwegian crown because that's also strong. Maybe you see it has a better absolute chart. You know that maybe it hasn't got this big area of resistance above, but unfortunately it does. So the Norwegian crown here. This is the dollar crown. So this is going down here. So dollar going down and the Norwegian crown going up. But here we're coming to a big support area for the dollar at 820. If we could break that, of course, that would be fantastic. We've got resistance above. I think this one is more going to range. Okay, it's got a big body of resistance above and a big body of support below. Absolutely crucial support. I mean, if that gives way, that is a very big negative message for the dollar. But it's at the moment it's more steady and more tackling the resistance of the dollar. And being bound by those two boundaries, I think this is not the one to participate in if you want to leverage this swing around, this pivoting around the dollar that's taking place with the yen clearly on one end of that. All right, I'll move on to the cryptos now. lots of action there, but let's start with the cryptos versus the US dollar on RRG. So here's the dollar. Here they're all of them on the right of the US dollar, and so they're all outperforming the US dollar, but they're heading very strongly. I'm just going to shorten the tail. I usually like to keep that to a week. 1, 2, 3, 4, 5 days, the last 5 days of action, but sharply losing momentum of outperformance there, because the dollar itself is steadying, and these are all these two of them are flirting with the high. Litecoin is just looking completely uninteresting. But let's have a look at it. Bitcoin first. So look at the weekly chart. Here you see the significance of it. Here's the April high. Here, so we breached that high. A lot of people bought into that. I scrambled to buy into that, but it was rejected very, very quickly, and we've come down, and we were really hesitating at 60,000, that round number there, that previous high. However, I think it's steady. I think it's just delayed, and it's going to make the break. It's we've got this higher lows pattern in here. It's resting above, in my opinion, the resistance. I know the sort of high is the resistance, but the consolidation is here, and we are resting above it. I think that's a pullback, and then we'll see a retest. So here's the hourly. So we've got a little bit of support, resistance, sorry, at 63,700. Then the sort of headline grabbing high at 66,647. And I think we've got a pause here. But this rising lows pattern here, I see this as just a correction in the move, and a pause, and the trend will resume on the upside here. As far as Litecoin is concerned, it made the break to new high first. Excuse me there. So let's get to the weekly, so it's pushed ahead here on the weekly, and but it's still got very good resistance here, not at new highs, but 229.40 resistance here, and then the high right up here for 11. But pushing ahead towards resistance, well supported, rising lows pattern, daily chart. Here we see the rising lows, we see the resistance ahead. Clearly, we've got a more attractive chart in the Bitcoin. Not that attractive, but steady looking in Ethereum, and then Litecoin is. I just made a terrible mistake. That was Litecoin. I was wondering, I was saying it should be a new high, because we flirted and made a new high. So what I was talking about there was Litecoin. Excuse me for that. It's looking steady, but way below its high, and lots of resistance above. Least attractive of them all. Ethereum is flirting with its high, like Bitcoin. The high here was more of a spike than on Bitcoin. Bitcoin was a consolidation high. This was a very brief high here, so that should be easier to break. We flirted through it, but it hasn't yet really broken it. But in my opinion, it really has broken, because this is just a spike. Really, the high was here. This was the retest of the high. Now we're above the high. I think this one is on its way, actually. And so, in the order of things, I think as far as short-term potential is concerned, Ethereum leads. Bitcoin, close second. Litecoin, a distant third. It's actually probably 10 there. It's not very attractive. Lots of resistance above. But this one, both of them, I really think, although they're not trading at the highest, above the highest price they've ever traded at, they are trading above the consolidation high, which is now, to me, support, and therefore they're going to push ahead. So both of these are likely, I think, to be good and continue higher. What would negate that would be breaking these recent lows here, 3893, for example, and punching in below this 4,000 high in here would negate that bullish sentiment. We've got the same levels in Bitcoin too. Sorry about that mistake there, putting up the Bitcoin chart and talking about it when I was meaning to talk about Ethereum. Okay, moving now to silver and gold. Let's look at the ratio here. First of all, silver divided by gold. So rising as it is here means that gold is outperforming silver. This is the weekly chart. In a weekly chart, gold is underperforming silver, and I think that's the real trend. We saw here, and we talked about here, bearish divergence in it, and so it stalled as we expected. So gold is underperforming silver. So there's a couple of different ways you can underperform it, and one of them is to simply go sideways when the other one goes up, and that's what's really happening in gold. It's continuing to go sideways. It's ranging, and the ranges are narrowing up. It had with the RSI at 50, it just looks like it wants to continue to range really, and to move sideways. But the silver is pivoting around it a bit, moving up here. Slight pullback in the last week, but I think that is still a rising trend in here, and it hit the resistance that we'd seen at 2480, and it went to 2480. It's pulled back from there. If we can clear the 2480, we can go to the next levels at 2515, 26 up there, and this higher low pattern does indicate that we want to do it. So I'm hoping to see that this is a correction that will stabilize this week, and silver will resume its uptrend, and gold will continue to go sideways. Gold is an amazing disappointment, isn't it? From all the things it's supposed to do, it's have all the factors which are supposed to make it bullish thrown at it in spades, and yet it just continues to go sideways. It's amazing. It is really as if cryptocurrencies have taken the role of gold. It's not possible for that to happen, because the biggest holders of gold are central banks, and their central banks switch from gold as their inflation hedge and to back their currencies to cryptocurrencies. You can't say that. But as far as people are concerned, speculators and the public are concerned, I think there's a strong case to be made that cryptocurrencies are the new gold, and just the kind of people, private people and smaller people that would buy gold normally have been buying cryptos instead. The next people in between the two is the institutions, and more the institutions are warming to it. They have a lot of difficulties with it, legal difficulties, compliance difficulties. There's no proper, the ETFs are not the right type of ETFs for them yet, for a mass migration into it and out of gold. There is a new ETF coming out, which is a hybrid of Bitcoin and gold, which might be a popular one. They have a step, transitory step for some of the institutions, because of course they can trade ETFs. Okay, so moving now on to Brent crude oil. Brent crude oil is consolidating at its, let me just bring this in, important 2018 high. There it is. There, 2018, high. That's where we're at. That's why we're having a little bit of a scratching of our heads at this level. This is a pullback here that's going on. But one of the things about it, which makes me feel that it's likely that this is just a temporary pause, is the very, very, very low volume that we're seeing in this. This is the January contract here, so it's not anything to do with being nearby. We're seeing very low volume in this pullback here. That means we can label it a pullback, a correction, not a reversal in the market. There's no weight behind it at all. This looks like it's getting ready to resume its rise. We were warned by the bearish divergence in the RSI that this was losing momentum. We did say that at the time, but now I think the fall is losing momentum. The correction is moving momentum, and it's getting ready to stabilize. And I think it'll be close to just maybe a little bit lower than where we are now, but close to where we are now. So watch that. This is And we know what excitement there can be if we can break through that high. There's blue sky, not quite blue sky, but we came down so fast from $110, but the rise could be really fast as well. So watch out there. If, however, we start to drift more and the volume starts to pick up, then all bets are off with regard to that bullish, feeling that I have about the market. Now, starting with the stock index, the S&P still strong here, and we had that seasonal, we can say, repeated seasonal pullback in there that we saw. It was due, it happened, it ended, in the very week that it was due to end. Don't forget, the end of this story is that we have a strong move up in the last quarter. The strongest period of the year is starting now for the stock indexes, and doesn't it look like it's getting a little bit of heat under it here now? The weekly bars are going up. The MACD hasn't yet crossed over strangely here, even though we're at new highs. The RSI is very strong here on the daily chart. Support, obviously, from the old high here, if we need it, which is at 4,545, and also minor support here at 4,550. So, good support very close behind us here, but looking steady and strong onwards and upwards, I think, is what is indicated here. But one of the things I did want to talk to you was about the TECH100, because this actually was a wait on when we had that weak period in October, at the beginning of the first 3 weeks of October. The tech area was weakest, but it's flipped around now and it's gone back to its, I'll call it its normal role of leading us up. We've made new highs here. In a relative basis, it's safe to return to the tech stocks. Not every one is looking great. One that now called Meta is not looking great. That one, Facebook as we used to call it. But generally, the FANG stocks are looking strong again, look like leading. And so this index is now at the top of the list of the best of the index, the S&P. Next, look at this RSI making a new high here. It's really, really strong and well supported. So it's a rotation there back into technology stocks. Looking then to the next one on my list, if you like, of favorites is the German 30. It's moving up nicely here, approaching its high and approaching in a very purposeful way. I think it's gaining a bit of power. We have got resistance. Don't underestimate that resistance, 15,800 right up to the high here at 16,000, we'll call it that. But it is moving up strongly towards it. That's within striking distance. The RSI is looking fantastic in it. I think this is going to make its break. But the UK 100, I'm not.
Here we go.
I saw it. This is this one. Yeah, it's here you say, well, it looks okay. It's broken above that resistance, but here's the problem. If I go to the weekly chart here, and I'll show you what's back on the left here, it's going to be such a difficult job for the FTSE to go up. Look at that. These other ones are up here or above them here, but this has got all that above it. That's massive. That is 4 years of consolidation. That is a concrete ceiling. So it's punching into it, but that's really because everything else is going up. And so, but it really is going to probably continue to lag. It is lagging, and it looks as though it's going to continue to lag. All right, my friends. Dan, any questions, anybody?
No, that's it. Thank you very much, Trevor. I think that's it for this week. Unless you've got, well, thank you very much, everyone, for attending. Join us again, same time, same place next week. And don't forget that we're posting this webinar to our YouTube channel today. So if you came later and you want to watch the whole thing from the beginning, you can do so there. And don't forget to subscribe to our channel and click on the bell to get notified. And also, please, we ask you not to forget to do the survey that's about to pop up. It'll help us improve your webinar. Trevor, do you have any concluding remarks?
No, I haven't. I thank you for the questions. I think thank particularly for that tip uh, on the currencies and these highs here that I hadn't paid enough attention to. And you know, the great thing about the RRG is it does give you that Japanese yen. Okay, we chose the euro in the particular case, but it's still a very strong message. The euro is second most to the left. But here you've got on the absolute chart, you've got a very crucial point which is being tested here. So next week, you know, we'll definitely talk about this again, and we'll see whether it breaks or fails. My intuition is it's going to break. Yeah. Thanks very much, everybody. Enjoyed it. Hope you benefit from it. And may the trend be with you.
And also with you, Trevor. Goodbye, everyone.
Okay. Thanks a lot. Bye bye.
Bye bye. Bye bye.